He's going to open up the classroom for questions, so just to make sure you don't jump in or anything.
Just waiting for, so who do we got here? We got Cillian, catching pips, so that's 2. Alright.
Trashman, just a heads up, you may want to unlock the typing.
Oh, it's locked. Ah, shit. Speak video. Send messages. Give that a try. That should have unlocked it.
Awesome. Thank you, dude.
Not a problem.
Jay Spiggs, are you having a mic trouble there? Yeah, my buddy's having mic trouble. Oh well. If anything, he'll type.
It's all good. Waiting on 2 more. Jay Spiggs, how long you been trading there, buddy? And what do you kind of trade, so I kind of get a little backstory with you? Oh, okay, gotcha. So, when it comes to forex and indices and stuff like that, I myself personally am still kind of learning the ins and outs of that. I've been dabbling in that as well. My main field where I come from when it comes to trading has been crypto mostly. Um, High volatility crypto is my favorite. Um, I've traded a shit ton of ETH at the end of the day. Um, BTC, altcoins, all that kind of deal. So hopefully I can bring something new to the table for yourself and anybody else that's in here. Um, if you guys have any knowledge for myself that you don't think I have in my back pocket, I'd love to hear it. Because I may be teaching today, but I also like to learn at the end of the day as well. Um, yeah. So we are just waiting on 2 still.
Hey, Trashman, would you say like there's a lot of similarities with just with your entries, your stop losses, your take profits, and all that jazz, and With ETH, let's say to like the US 30, is your strategy like can it be applied across the spectrum?
When it comes to that, doing like cross strategies and stuff like that, absolutely you can still back test it. I strongly recommend back testing it if you're breaking out into a new market, which is exactly what I've been doing. I've had good success with the strategy that I still implement today. Um, I mostly take swing trades, 3 days to a week, low leverage, that kind of a deal. Um, I used to scalp, so I still know how to scalp, but just with my current schedule at the moment, I can't. But yeah, absolutely, the same strategies can be implemented um, on both ends. Yeah, absolutely. So
Thanks, man.
not a problem. So probably today, what from what I've seen in everybody's questions and stuff like that, we'll kind of do a hit off of the basics and kind of break down everybody's trading style. Um, what are their thoughts behind why they trade that way, why they make entry and stuff like that, why they exit, um, and just go from there and kind of build up the foundations and see how everybody's sitting at the end. So we are going to hit off of. So from what I see right off of the bat, that has been a big issue for a lot of traders that I have seen, including myself when I first started off, was impatience, FOMO, essentially, um, wanting too much of the market than it's willing to give. So kind of getting greedy, but not at the same time, believing that it is going to hit your TP. I've also seen it won't hit my SL, but absolutely the market can. Absolutely. Um, so a way around it is from what I have personally experienced. I've been in those shoes as well when it comes to attitude towards the market. And at the end of the day, the market's going to take what it's owed. We are just here to trade with the market. We're never going to move it. So you want to look at it with a level head, not kind of revenge trade. So let's say you just got stopped out, you're not going to immediately re-enter a trade. You want to take a step back, see what happened, see what went wrong. Take a note about it. If anybody here doesn't have a journal, I strongly recommend having a journal at the end of the day. It has helped me 100% realize what happened, what was good, what was bad, and it's kind of a note in your back pocket to go to when you see similar things happen. You can go, okay, back in October, this happened for this trade. Let's see if it works out the same. So, yeah, when it comes to impatience and stuff like that, um, risk management. So, a good general rule of thumb with risk management is I typically use about 10% of my port when it comes to scalping. When it comes to swinging, I use a little more just because of the time frame of the trade. But definitely do not overexpose your port uh, as much as you think you should be. So 10% is a really good, perfect kind of middle ground. So even if something does hit your SL, let's say you put your SL at 50%, you lose about 5% of your port. You can even reduce the amount you use as well to 5%, so you only lose 2.5%. But 10% is generally the go-to way when it comes to risk management at the end of the day. Um, that's my biggest recommendation when it comes to risk management and not overexposing your port. And same goes for having multiple positions. So let's say I had a position in ETH. I had a position in BTC, XRP, um, DOT. That's 10% of that each. That's a lot of overexposure to my portfolio, which I personally am not comfortable with. So I typically try and stay within about two trades, two different things, two trades. So that's about a 20% exposure. So that leaves enough for me to either hedge my position if I need to, so average in, or take the losses that I've had and leave with still some portfolio left. Um, so that's my biggest recommendation when it comes to um, risk management and stuff like that. So as you can currently see at this moment, I am in a ETH short. So my risk management for this one is 1.99. So I'm risking zero point 0.5 to 1. That's what I've always done. That's what I've kind of stuck to, that general rule of thumb. Um, Recently, you've probably seen Robbie take 50% trades. So then his stop loss is half of that. So it's 0.25. So kind of staying within that risk to reward ratio is a fantastic thing. A unrealistic risk to reward is if I wanted to take this trade down to 1,000. So if I wanted to take it all the way down here, in my eyes, currently at this moment during the market trend, that is not feasible whatsoever. It could absolutely retrace back up to where I entered or even hit my stop loss. So when it comes to risk to reward, it's better to have a set limit that you're allowing yourself to take profit and lose at the same time. Um, so yeah. What is the next thing? When it comes on entry and exit, I'll go with catching pips. What are your kind of thoughts on your entries and exits? What's been going on in your head?
So what's going on in my head is, well, number one, any confluences, like what do you use as a confluence to be like, okay, this would be a good entry point, this would be a good stop loss, like what is it like that you look for to give you that confidence?
So how I am as a trader is I hunt liquidity. So I'm a key level trader, as well as a hybrid system trader. So examples right here. So I've got a lot of lines, a lot of colorful things going on in my chart. That's just, I've always had it that way. So if you just take a look at this white line here right by my cursor, does everybody see that by chance?
Yeah.
Okay, perfect. I assume everyone else is in the same deal. So right at the end of this line here are orders just before the dump here. And they rolled that all the way down here. So in my eyes, from my theory that I've been doing, um, there's liquidity sitting at that level from here to here. Same goes for this marker here to here. The market's going to want to hunt that liquidity. They're going to want to stop those people out who haven't taken profit, who haven't paid themselves. And that is exactly what happened. You can see price wick into it 3 times. Take it out, come back, take it out, come back. So when it comes to me entering my trades, I go off of liquidity level, key levels, however you want to call it, and then my confluence in the trade to keep into it and to stay into it is I go off of moving averages, volume, and stuff like that. So just off of this guy here, the 50 moving average on the 15 minute was up on the high. It made its way back down to that 200 EMA, flipped under, indicating a bearish trend. I stayed in it, even though it had a little bit of reversal off this short time key level here. I've stayed into it just because it has flipped over this 800 moving average as well. If it does fail to continue downwards past that 800, I'm going to be looking at an exit. So most likely I'll be looking at an exit off of the support here if it does not make its way down. That's kind of how I set up my um, early exits. Same with if it does continue downwards, I have a hard exit at that 1214 mark, which is a heavy key level before all of this here. A lot of volume came in right at that key level there to drive price that high.
And in terms of key level, are those the order blocks?
So key level, no, it's not order blocks. I classify it as liquidity level. So it's where people's stop losses are, where their break evens are. That's where I classify it as. If we're just going off the SMC rule, um, there is not any order blocks there on the 15-minute time frame. There may be on some higher time frames. Yeah, so right there. So I would be technically taking it out on this SMC block here, but just past it. Just on the outside of it. So if anybody was going to take this SMC block, you can take it at the beginning of the block or you can take it off that key level, but most likely just from my TA, it's going to hit that block. It's going to hit this key level here. So if anybody's going to take that trade, I just kind of watch out for it hunting that level. I've seen it many times in the past where a block was under a key level and price hunted to the key level instead of reversing on the block. So.
Wow, thank you.
Not a problem. So this is kind of my first time teaching, so I'm trying my hardest. If anybody's got anything that is kind of chewing through them, feel free to ask. 100%. I will answer as best as I can. So I see a bit of stop loss issues, break even, and secure profit issues. Does anybody here have any specific questions when it comes to stop loss issues, break even, and secure profit issues at all that you would like to be touched on? What's a good take profit strat? So good take profit strat is obviously your 1 to 0.5 risk to reward ratio right off the bat as soon as you enter that trade. Some traders do want to take more than that entire position, so they want to take, let's say, 150%, 200%, 300%. It's plausible. You can do it. It's very rare though, and you are opening yourself up to a world of hurt if you keep wanting to hit that 200, 300%. Typically, a good double your position take profit to a half your position take profit is a fantastic way to do it. It also depends on when you take profit is the strat that you're using. Are you swinging? Are you scalping? At the end of the day, that kind of changes the way you're wanting to take profits and stuff like that. If you're scalping, the best way to take profit is to take profit at your 1% if you're using 100x, 2% if you're using 50, and so on and so forth. Price moves very fast when you're using high amounts of leverage. So at the end of the day, you want to not hunt as much for profits as you can. Take what the market can give you, but don't shorten yourself at the end of the day. Take what you are intended and what you are quote unquote owed. So when it comes to the SMC, take your 1%. If you've hit 100% on that trade, take it. Absolutely. If you've noticed a reversal sign at about the 50 or the 60% mark, which typically does happen, what I've seen from SMC at about the 50% mark, it does reverse back to entry. So Lobo's way of doing it is take 50% at 50, put your stop loss just inside profits to enough to cover your fees. That's a fantastic way of doing it. You could do it a little better. It's a little more risk at the end of the day. But once you do see it hit that 50%, let's say you're doing a swing. Once you see it hit that 50%, yeah, put your stop loss inside profits. That in your mind, that's not a losing trade. You'll never lose that. At the end of the day, you'll always get profits when you move your stop loss into profits, but you want to make sure um, that you are securing your profits when it hits 100%. Absolutely. What do you mean by take 1%? So when we say 1%, it's back to the SMC rule. So SMC is 100x leverage, 1% moves. So price moves from here to there. That's a 1% move, so that's your entire position back into your pocket. So if I was using $100 on 100x and 1%, I just made back that $100. Just to answer your question there, JSpig. For me, my
All right,
TP,
thanks.
not a problem, man.
Hey,
Uh,
I guess I got my mic working now. Hey
that's all
guys.
good. Yeah, sweet. For me, my take profits at 10%, because I'm using
Cool.
10x leverage. So just kind of how I word. I could have worded it better, but it worked. um, so does anybody have examples of revenge trading at all? Trade you just got stopped out on and you go fuck this market and you just re-enter?
Oh yeah, it's happened to me a bunch,
Yeah,
and I always end
it's
up losing.
Same
yeah,
here.
it's tough. It's really tough. When I first started, that was yeah. I've everybody that I've met have revenge trade. It's a terrible thing to do. It always you end up always being the loser because you don't have proper TA behind it. So to step away from the charts after a loss is a big thing, especially if it's consecutive losses. Um, let's say you've just lost 5 times in a row, you're pissed off, you're like, fuck this chart, and in your mind, you're thinking, this thing owes me money, I'm going to take it back, and you hit that revenge trade. At the end of the day, the only person that's going to win is the market. The market's going to win each time, because those 5 trades, you put TA behind it. That one revenge trade probably didn't have any TA behind it. So how I look at my portfolio to differ from the revenge trading is I look at it like I'm the bodyguard of that portfolio. So I'm gonna allow it a certain amount of risk, but I'm always gonna protect it at the end of the day. And I know if it does get hit a few times, it's okay. At the end of the day, every loss that we have, we learn from. And everybody's going to lose and have a losing streak. It does happen. It's happened to me, and it's not a fun time. And to pull away from that mindset of all getting all pissed off and saying fuck the market, it's never a good thing. So my strong recommendation is if you're just down in the dirt, you've had loss after loss after loss, take a break from actually entering in trades and just use the same strategy you would in a trade just on your charts. So use the short and long position on TradingView and see how that trade would have played out. Um, and just disconnect yourself from your portfolio for a bit. Let everything kind of cool down and just kind of get back to the level head TA, back into the books. Um, I know when I've had a losing streak, I always go back to my basics and I build myself up from there again and I figure out what went wrong, why did I do that, and that's a big thing to start off as. I always have my book beside me for looking at past history and stuff like that. Um, but don't get me wrong, I've done revenge trading. It sucks. every single one I've lost. Um, so just pulling away, getting a level head, or even getting a second opinion is a big thing too. Um, if you've just had loss after loss after loss and you're all pissed off, reach out to somebody. Go, hey, can I get a second set of eyes on this, on my TA? What seems to be going wrong? Because I've had loss after loss after loss. Um, 9 times out of 10, they'll be able to bring something to light on what happened that you may not have ever seen. That's a big thing as well. I go to Robbie, I go to Lobo, anybody here, um, and they always shed light on what happened. Um, so definitely having a group kind of helping you out and stuff like that is a big thing as well. And to answer your question there, Clems, no, I do not swing on 100x anymore. That was one time. I took my money and I ran. Um, Okay, when it comes to basics, because I do see a lot of people who are wanting a little bit more information on basics. So what are we looking at for basics that we want to relearn and touch note on? So I'm gonna go on just down the list. Blacko, what kind of basics are you wanting to just touch base on at the end of the day? I don't know if your mic's not working or not. All right, I'll give him a few minutes. Catching pips. What kind of basics do you wanna touch on, and what kind of questions on the basics that you've been kind of confused about?
I mean, for me, honestly, like I really appreciated your explanation on the whole psychological aspect of things because being new to this and then looking at a clean chart, it's okay, where do I start from the very beginning? And then to have the confidence in order to be able to see a pattern or see what's going on and then be able to set my parameters.
Hmm. Yeah, that's the biggest thing. Um, Also, just kind of learning how you are as a trader is a big thing too, especially if you're relatively new to this, because you may enjoy scalping, but swing trading or dollar cost averaging or buying and holding may be your thing. It's all dependent on your personality, who you are, and stuff like that. Um, and so that's the biggest step to take from there, and it all depends on how much time you can put into the charts and stuff like that. Swinging or scalping is definitely more time consuming than swing trading when it comes to TA and getting your entries and getting your exits, because you're consistently watching the chart all the time. Um, and so maybe some people with less time are better at swing trading, or it's all dependent on your time frame and stuff like that, and how much you can put into the chart. Um,
I'm sorry, Trashman, I see your trend lines here. Like how do you determine your trend lines and then knowing that okay, that would be like a new support for, like with the latest channel you have to the right?
oh, so just how I kind of picked out this channel right here.
Right, as to like an overall picture or like why specifically?
So this one, I made this channel very, very late. I made it probably, um, Emmett was there when I made this one. Just from me seeing where it has bounced off of, based off of key levels, stuff like that. I know it's not bouncing off key levels as much, so I can't go off of that and just slap a straight line across. So it's made consistent and even jumps across. So that's why I chose here, because if you take a look further back, it's not going to connect to the top of a candle at all through here. So then I'm like, okay, what's the nearest candle? Right there. And then you kind of line it up. See how it works out. See how many you can catch. See if you can catch just the wicks or you can catch all the bodies. And at the end of the day, you don't have to be 100% accurate when it comes to the support and resistance. As long as you kind of get in the ballpark of it, you'll get the fine tuning of where exactly it wants you to place it. Um, this support here, I know just by looking at it, I definitely did not place it 100% as best as I could. I could improve on that. So it could be shifted, because the goal is to try and catch the bottoms.
Okay. And when it comes to your key levels, the liquidity areas,
Mm-hmm.
uh, factoring like, do you ever factor in sentiment or fundamentals to because like I don't know, is that like a big factor like for you knowing it's going to go back to a certain liquidity area or may take a turn?
When it comes to liquidity levels and stuff like that, I have a tiny bit of an advantage on that as well. I use high block as well, which actually is a big map of liquidity levels for at least BTC that I have. So I base that off of that as well, and I convert it into Ethereum. When it comes to price returning to a zone, it's all dependent on the amount of volume that it originally had when it left that zone originally. So just based off of how aggressive the move is. So if you take a look at this key level here, which was drawn across, which we returned to Saturday, Friday, that was a very massive spike down with good volume behind it. So that was
Uh-huh.
7.87 volume behind it. A lot of people had orders in there. A lot of people. So, saw it, drew it across. Now, when it comes to drawing key levels with low volume, can happen. I have a few drawn in here that were low volume. So, right there. You can see not as much volume, so 1.30 drawn at that key level there. And if I scroll over, disrespected. Completely broke through, closed above. So when it comes to myself, when I draw my key levels and liquidity, I go off of volume. Volume is a big determining factor when I draw my key levels. If that
Dude, that
kind of,
is awesome. Yes, thank you
yeah.
very much.
All
Because
right,
like
sweet.
drawing key levels, sometimes I'm like, why isn't it like working out? And I wasn't
Yeah.
looking at the MCAT and the volume.
Yeah, I hear you, man. It took me a bit to kind of put the two together as well. And at the end of the day, I also add in the vector candle recovery, but that's with the hybrid system. Um, if you take a look at the just out zoomed chart of the area that we're in, we have a ton of vector candle recovery to do on the downside. So that's why I've taken my TA and placed it into my short. And then my entry I based off of key level. So I had my good entry, and I have my exit as well based off volume. So I'm not going to take this to 100%. So I've already placed my stop loss. What is my price for stop loss? My stop loss is at 1292.69. So it's just under the top here, which it can go back to that point. That's fine. I've already secured my profits if it does hit my SL at the end of the day. So the trade that I'm currently in is I can't lose. At the end of the day, I come out green, which is a big thing. Moving your stop loss into profits is massive, but don't be chasing price with your stop loss. So let's say by chasing price, I mean, let's say I take that 9.2 or 9.3 stop loss and I see that it's down here now. Oh, well, I'm going to move it to here. And then it moves further down. Oh, I'm going to move it to here. Because all it takes is one simple snap up. There's your stop loss. That's the only issue I see when it comes to traveling stop losses. When you place a stop loss, that's where it sits. That's kind of where it's going to be. Same with if you notice that price has gone into the red for yourself, and you're like, oh, I don't want it to hit my stop loss. I'm gonna take my stop loss and I'm gonna move it up. Never do that. Trust me. I've done it in the past. It always hits your stop loss.
Oh man, yeah.
Always. Always has hit your stop loss. When
Do you
spe-
take partial profits,
I
or
used
do you just move? Yeah.
Yeah, I used to take partial profits. So let's say on a swing trade or on a scalp trade, so a 1% move, let's say you took profits, so take half at 50%, like what Lobo has for a rule, and then set your stop loss to entry. If price does go down to your TP, you lose 30% of your initial buy-in. That's what I've calculated it out as, and I'm not a fan of losing out on 30%. I'd rather take my stop loss price at 20% than lose out on 30% total. That's kind of how I look at it. Different traders look at it differently. You can definitely take half profits at any point during your trade, wherever you feel is fit, uh, to secure that profits. Absolutely.
Yeah, okay. 'Cause I've done what you've done before, and or what you mentioned. Not that what you've done, but where you keep moving your stop loss down, and then end up just hitting my stop loss on one of those frame volatile moves.
Yeah, and at the end of the day, you lose more and more and more each time when you move that stop loss up. If it's hunting your stop loss, that's a great indication of reversal or possibly a reversal that was not found. You probably didn't see it. It happens. It happens to the best of us. Um, yeah, keeping stop losses at a good level and not increasing your stop loss is a massive thing to do. Um, but putting your stop loss in profits, best thing to possibly do. You'll never lose. So, so
One
key.
more thing to just add quickly. Uh, with the hard stop losses, you don't have to move them anywhere, right? But sometimes for this, if you're disciplined enough to close it manually, we have a stop out rule. Usually, price has to close in a level where your stop loss is. So it's not just a wick, you know. So oftentimes, obviously, your stop loss is going to be somewhere above or below recent swing, and oftentimes you're going to have just liquidity grabs. So if you want another option instead of hard stop loss, is you wait for the candle to close, whatever time frame you're trading. So if you're trading a 15-minute, wait for the 15-minute candle to close at or below or above whatever your stop loss, because
Mhm.
oftentimes you might have, if you don't want to, instead of moving the stop loss, you see that it approaching your stop loss, instead of moving it up or down or whatever, you wait for the, if it closes, then yeah, then there is a confirmed level breach, and you know, that's it. You have to take the stop loss.
Yeah.
But sometimes it just, yeah, you put it a little too tight, and it wicks you out of your trade and then reverses.
Mhm.
So wait. I prefer.
Oh, he muted himself by accident. Stan, you muted yourself by accident. Yeah, he'll figure it out. I was Thank you, Stan. I appreciate that. Yeah, that's also another way you can do it as well. Is if you are consistently watching your trade, and it happens more in scalps than it does swings, is when it wicks into the general area of where you would have had your hard stop out, but doesn't close above a certain price. That's when you notice when Lobo makes his calls. Um, he'll set a if close above this level, close out of the trade. So I call that a psychological level, a psychological stop loss. So on this trade that I'm in currently, I have chosen the 1335 mark, so where this key level here is, as my psychological stop out. So if price does reverse, like if it was in its infancy, if it does reverse and close a candle above this zone here with volume, that's a fantastic indicator to close my trade out, take my loss, and then reevaluate what
Right.
happened.
Sorry, I got kicked out, but yeah.
You muted yourself.
No, I'm walking my dog.
Oh, gotcha.
Yeah,
So,
I guess the press in the pocket. But anyway, yeah,
yeah.
you got, yeah. All right, I'll mute myself now.
Thank you, Stan. I appreciate
Yeah,
that. Yeah, you explained it a little better
yeah.
than I did. Thank you.
No. I mean, but yeah, it just some people start moving their stop loss. Don't move your stop loss instead of just wait for the close. If it closes, you take it. If
Absolutely.
it just whipped you out, you got lucky. You live another day.
Hmm.
Right?
Absolutely.
Yeah,
Yeah.
you got it.
Yeah.
Yeah.
You also got to watch out for liquidity hunts as well when it comes to that. So when price makes a massive move in either direction, let's say into your red, and it starts hunting your stop loss. So let's say you didn't have a hard stop loss, you have a psychological stop loss. It starts hunting that psychological stop loss, and it completely blows through it and is really, really high above your psychological stop loss. I strongly recommend seeing if it will retrace down slightly so you can close not in as much of a loss, or take your loss the way it is and kind of reevaluate. That's why I'm not a massive fan of the not a hard stop loss, because I'll have a psychological stop loss inside of my red and not past my hard stop loss. I'll always have a hard stop loss just in case of bullshit moves like this. I'll show you a good example of a stop out and a complete mistake that I did. So I was in a short from this key level here and off of this daily order block here. Wrote it down. I did not see, and I did not mark out this key level here that had a ton of volume behind it. It had 2.73 volume behind it. I didn't see it hit that level. Didn't focus on it. I went to bed about here. Woke up to here. Said, "Oh no, that's a retracement. It's okay. I'll be fine." That's where my hard stop loss was. 12.78. Completely hunted my hard stop loss. It happens. I took that L, went from there, went right back into the books, figured out what went wrong. Stan helped me where I went wrong and stuff like that. I should have taken the profit at that key level. And I've just gone from there. So who is next? Sullian. Do you have anything off the top of your mind that you want to go into for going over basics and stuff like that? Just straight fundamentals that you want to touch on? Also, Blacko, you can type in the chat if you want, if you had a question at all. Unless you got your mic working there, buddy. Oh, you're just trying to reconnect. It's okay. You can just type your question out in the chat as well. I have it up here, and I'll do my best to answer any questions you have. Same goes with you, Blacko. And I'll just kind of go down the list and see who's got what. Oh, he's gonna try and reconnect. I'm gonna butcher this name. Xauz. Do you have any questions about basic fundamentals, stuff like that? What you want to touch on just from the bare bones basic?
Not really from like a basics perspective. I'm kind of at the point where I have a strategy that's worked pretty well in like the late summer and early autumn, and then that kind of got me funded and made some money there. And then this last few months, it's really just been break even. And I attribute it to a couple of things, mainly Um, it's usually not me getting stopped out. It's almost always either it running in profit and me not moving stop break even, and then I end up getting stopped out in the end, or I move too early and then get wicked out and
Mm-hmm.
um, and have that basically go in the direction that I had predicted. Um, and I've tried using like softer stop losses in the past, or like not moving stop to break even and instead basically saying like, all right, if it closes above here, then I'm just going to close it. But
Mm-hmm.
I mostly trade like 15-minute, 30-minute time frame, and so especially on GJ these days, for whatever reason, there will just be these massive candles that come out of nowhere. Um, and so what was like a 1.5%, 1% win ends up just getting full stopped out in like literally 2 minutes of price, right?
Oh,
So
okay.
I guess that's been like the biggest struggle lately, but I've kind of taken a break from like live trading. I've just been using a demo for last month, and I'll continue to do that probably into like January, February, just to like kind of get back on my feet in that regard. But
Yeah, absolutely. If you don't mind me asking, what kind of like leverage are you using with what you trade, or do you have access to leverage?
well, I don't have a lot of money to trade on my own right now. I have a pretty small account that's basically just the earnings from the funded account. But otherwise, the funded account is 100 to 1 leverage. So 1% usually is just what I risk by default. I just calculate it every time. I have a calculator app that I use, and just makes it really easy. So
Okay, okay. Um, so I'm not 100% like coerced into the whole forex, gold S&P, that whole ordeal. I'm still learning myself on that side. So when it comes to risk to reward, I'm gonna treat it like how I've been treating crypto. Um, maybe it's the same conversation I had with Blacks and Robbie and stuff like that. Different seasons have different trading styles, and this is what I've noticed. So the summer is mostly scalps, from what I've noticed. So quick, really fast, 1% moves. And I've noticed as winter hits and as it gets colder, I've noticed that swings are starting to come out on top just because of how volatile everything has been, how fast it wicks up, how fast it wicks down, that kind of a deal. So when it comes to that, um, people using the lower leverage have a little more wiggle room at the end of the day than the people using high leverage. So we can go into the red for a little longer and a little more than somebody who is using like 100x leverage, so massive amount of leverage. Um, so maybe take a look at just kind of adding a different kind of trading style to the different kinds of seasons. See how that works out. Adding uh, swings in for the winter or lowering your leverage down for the winter and stuff like that. Kind of see how that treats you with your demo account and see how that turns out. Because you may, like with those wicks up, they're pretty nasty at the end of the day. Maybe using a little less leverage um, will help you survive from that wick out.
yeah, and like that's the I guess like the big problem too is like a lot of the times with the broker that this particular funded account is through, um, the spreads are massive, and so even though there's like really good setups, it's just literally not worth it to enter, right? Like usually my stops are like 25 to 35 pips somewhere in there,
Mm-hmm.
and like if the spread is like 5 pips, it's just like terrible. So I've definitely like that was how I originally learned to trade was like 4 hour, 1 hour daily, um,
Yeah,
like time frames, but I just lost so much sleep. I kind of moved over to like more intraday stuff.
yeah.
Um,
Yeah, I hear you. I hear you. So you and I trade very similar time frames and stuff like that when it comes to that. I assume you use a lot more leverage than I do. Um, so maybe take a look at a different kind of trading style on how it's going on and stuff like that. Or maybe if if I'm hearing it correctly, it may be an exchange issue. Maybe look at another issue that's offering something else.
Yeah, definitely. Yeah, that's why I think it's been nice to take like a couple months to kind of like sort of refine the strategy a bit. Because yeah, I've had like a lot, like this week especially, I've just had like a ridiculous amount of break evens.
Hmm.
I think I had like one win, one loss, and then like 3 break evens was pretty much my week last week. So
So, how long are typically your trades, if you don't mind me asking? What's the time frame between when you enter and when you either TP or break even?
it kind of depends. Strategy that I work with is basically trading like the Asian breakout. So at least on GJ and gold, usually there's like a lot of volume right before like pre-Asia or right when like the Asian Open is. So it's like 4 o'clock my time, Western time.
Hmm.
Um, so it depends. I mean, more often than not, it's like between 30 minutes and an hour is like as long as I'll hold. Just because I'm basically just waiting for like one particular breakout at a very specific time. And I've noticed a lot of like wicks during that time too, so I've not been too keen to hold
Hmm.
um, more than like an hour, I would say. So that's kind of the time frame, I guess.
Yeah, yeah. So how I look at it when it comes to opens and closes of exchanges and stuff. So you can probably see on my chart here. Um, it's kind of hard to see actually. Let me just move this shit out of the way. So you can see like the Tokyo Hong Kong Open, the EU London, US Brinks New York, and then Sydney actually just opened right now. Um, from what I've noticed, and I'll have to double check this with Stan, because him and I have been going back and forth about this as well. The Tokyo and Hong Kong Open, same with the EU and London Open, set up price for New York in the morning. So that's what I've noticed a lot of the time. So it's about 70% of the time is how they set that up. So Tokyo and Hong Kong will go for a complete dropout of price. EU, London will either reverse half of it, drop it, drop it again, and then when New York opens, they will completely blow the orders out of the water of anybody who has been short the previous night before. Um, that's what I have noticed with the open and closes of certain exchanges.
Yeah, I've definitely noticed that as well. I think especially with like the Asian Open, usually if there is like a big, not even a big move, but just like a more like rangy, like cleaner move in the afternoon, almost always gets corrected in Asia, I've noticed. Especially when there's um, like a pretty clean move down or up and then followed by like a consolidation. Um, that breakout at that point, like near the Asian Open or waiting until potentially London, almost always corrects it. So
Mm-hmm.
I've definitely noticed that as well.
Mm-hmm. Absolutely. And I've back tested in the past, trying to match the direction of exchanges when they open, and that had little to no success. Because how I back tested that was I would see that Tokyo Hong Kong would open with a drop, EU and London would open up with a half position drop, and then when New York opened in the morning, because that's my time, that's when I get up, all long. And what I've noticed as well, that they're pretty smart at the end of the day. It's essentially an algorithm working for itself. They'll snap price down, stop people out, and then continue their move up. So from what you told me earlier about price snapping you out and then bringing you back down and going to your TP, that's most likely what's happening is you're catching it just as an exchange opens, so it's a super volatile time where they're trying to decide where they're wanting to go, and they're going to stop people out while they make their decision.
Yeah, let's see. I can share my screen here in
Yeah,
a
for sure.
second. If I can show you a little bit more. Let's see. You might have to give me privileges. I don't know who's modding the server. I can't stream right now though.
That's me.
At least temporarily.
Share their video, share their screen. There we go. Give that a try.
Yeah, I got it.
Perfect.
You'll have to bear with me. My alt key is my push to talk, so I can't move my thing while I'm
Oh, that's okay.
doing this. But basically, these the yellow and green are Asia London sessions. So most of the strategy basically has been waiting for either a consolidation pre-Asia or during Asia, and then trading the breakout either during Asia or during London. This would be an example of like basically pre-Asia.
Okay.
A breakout of like these highs. I think this one was.
I can chime in and just help you out a little bit. So, yeah. So basically, Asian session is the less liquid one and less volume. So usually it ends up being a range establishment as an opening range for the day, so to speak, right? You can trade the breakout during London Open, for example, not during Asia. So leave the Asian session alone as a range. Now, if you want to trade what you were describing as a breakout out of this range, you have to understand there's two types of ranges. Sometimes it's a very wide range, and that's not the one you want to trade as a breakout. What you want is a very narrow range during Asian session, and then when London Open hits, it's like a coiled spring. You coil a spring, right, and then you release it, and then all the pent up energy gets released, and it usually moves into one direction. Usually, U.S. session actually usually reverses then the London session as it takes over the book. London session also it can trade from 3 to 4 a.m. And then at 4 something it starts reversing. Again, you have to understand the narrative behind all this, given a particular session and what happened prior. But as a rule of thumb, so there are indicators that will mark Asian session. Like I'll show you on my screen. I actually have it for that reason. Hold on. It's a little more advanced stuff to trade it, but not for the scope of this webinar. But so here, I'll just mark it in some brighter color. And let's go to whatever, your GJ. So see, sometime. Wait, let me actually do some past ones too. I'll look back periods 10. I don't have my trading terminal here in it's in Florida. Basically what I have is 1 sec. 10. There you go. So when you have like this, see? When you have a very narrow range type of Asian session, when you have a breakout, this is the end of Asia. This is London. This is Frankfurt. This is London. This is London session. They probe the lows, and then you have the breakout. See how violent it is? And that's the one you want to trade. Same thing here. Narrow Asian range, boom, and then New York reverses it. When you have wide one like this, you don't want to already trade the breakout. Okay, you're too late. This is the move happened in Asia. Sometimes it happens. So those you stay away from. Also, pay attention to the candle closes. Why I'm saying, because a candle close is they probe the low and then they reverse. They suckered in breakout traders, and then they reverse in them. So always wait for the candle close as for confirmation. Again, wide range, do not trade. A little more narrower range, you can catch something. And so same thing here. This is kind of like no range day. So just as a rule of thumb, that's. Let me just remove then get back to normal. So that's how I do the Asian session range.
Yeah, definitely. And to be honest, that was like a lot of how, like how I used to trade as well, was like waiting until London. But that was like part of what I wanted to like talk to you about when I messaged you on the Telegram. Just because I've been seeing like basically the same move every day, like especially during Asian session.
Okay. What kind of move you want to like just show us? So we
Yeah,
so
this
let
is the
me just
perfect example right here.
wait one second.
On the demo account.
Mm, Wait one.
So basically the afternoon range would have been here, and then basically waiting for the Asian session and then waiting for the breakout, or a close below these wicks. Basically would have been the entry. This one I
Mhm.
early just because of this resistance, and this level has been around forever. On the 4-hour, this level's been around forever, so I was excited it was respected. But yeah, that's kind of an example. And a lot of the same stuff on gold as well. A lot of the same stuff on gold. This was a bad entry, but this is another example. Basically a short-term support, short-term resistance, and then pretty much as soon as Asian open, there's a huge breakout. And then here as well, sort of the same thing. It's way more messy over here, but basically, you know, an hour prior and then right into Asian session is this breakout. Because traditionally, I mean, as far as like as long as I've been trading, it would only happen like once
Yeah,
London
well, yeah. Last couple of weeks was
consolidates until then, right?
right. So I mean, last couple of maybe this whole week and last couple of weeks, it's not wasn't exactly. It's very volatile. Volatility is through the roof. So it's not normal trading conditions of the last decade. It's a little different. But if you spot a pattern that is repetitive and you can backtest it and take advantage of it, you just won a lottery. Because that's what it is. It's pattern recognition. All technical analysis is just pattern recognition. And if you spot patterns that are not easily observable by the masses and you see them work, that means they'll work for longer. And there's a reason why they're there. So that's why a lot of people complain about technical analysis. Oh, I thought head and shoulders should break down. Okay, in what context? What happened? What's the macro environment? Et cetera, et cetera, et cetera. But since everybody knows head and shoulders, everybody looks at the chart. Oh, this is head and shoulders, right? And it doesn't take a genius. So that's why it takes a little more complexity for it to work if it works, and the probability of it working is now for maybe 50-50 at best. So, or 60-40, whatever. So if you find a pattern and you see that the price action, because for a while, for example, I remember for years it would be a London Open would go a risk off, and then U.S. cavalry arrives and it completely turns out the whole thing, and it goes the other way completely, and you would just trade that pattern back and forth like a stupid monkey, and that's that. But that pattern went away, and now if you find something that works, just go with it, But this is more for advanced already lessons and all of that stuff. So I'll pass it back on to Trashman.
Thank you, Stan. I appreciate that. That was
Yeah.
definitely an insight that I couldn't have worded myself, to be completely honest, because at the end of the day, we're all still learning. So it's awesome that you got the answer that was best suited for your question there. That's awesome. I'm gonna answer Blacko's question here. Here for the psychological behind trades and losses, whether you focus more on RR or win rate. So what do you mean by that, Blacko? Like focusing on like how many wins to losses you have, or what do you mean by that, there, buddy? Oh, I just meant the context behind the question. So you're short. Let's say you're only taking 10 RR trades because of the probabilities. You lose 9 trades and 1 win is still profitable. So you're talking about how to get past the psychological barrier caused by those 9 losses? Is that what you're talking about? You can see. Okay. So from my understanding of the question there is the same kind of point I talked about earlier is loss after loss after loss. It sucks. It does, and it hurts you mentally. So one big thing that I do if I've noticed that I am at consistent losses is to start back testing the strategy I've been using and figuring out why all of a sudden it has not been working. Um, and getting a second insight on how you trade is a big thing too. A second set of eyes is probably the best thing you can possibly do because they can give you an insight onto what's been going on that you may not have possibly seen. Um, like I go to Stan, I go to Robbie, I go to Blacks, and I go to Lobo with any of my trades that I'm in, getting a second opinion and seeing where they see that trade from their stance, from where they've been sitting. Um, so when it comes to hitting that many losses and only having one profitable, maybe it's time to look at a different strategy or to change it up. Go back to the drawing board when it comes to that strategy. At the end of the day, you did mention. No, that was Cillian. So yeah, hopefully that was a good answer for you. Um, that's the biggest recommendation I can give you when it comes to the mental aspect of trading. Um, Me personally, after a while, you will completely disconnect yourself mentally when it comes to trading, and you will treat the profits the same way as you treat your losses. You'll look at them the same. Win's a win, a loss is a loss at the end of the day. Um, and you just have to look at it with a level head, level mindset, and not kick yourself about it. You can see when I took that stop loss, when price hit my stop loss a couple days ago, I laughed about it. It was funny, and I talked to Stan about it. I talked to Robbie about it. I talked to Blackson about it, and I got stopped out by news. It happens. Absolutely, it happens. But when you're hitting, yeah, like 9 lost trades with one still profitable, um, I would look at improving your strategy or looking at adding to the strategy or starting from ground zero again and building up a brand new strategy uh, when it comes to it. So did I hit the nail on the head there, Blacko, or do you have any more questions there? Perfect, perfect. Um, so at the end of the day, my DMs are open 100% of the time. Um, and so if you have any questions or concerns about what's been going on, let's say you've hit a few losses and you're a little concerned about the trading strategy that you're using, feel free to shoot me a message. I'd be happy to look at it, and I can even run it by Blackson or Robbie or anybody else to see if I can get a second opinion on that strategy as well on what happened with that trade and give you the best answer possible. And to touch on the prop firm one, um, getting a prop firm account rather than putting money with a broker. A lot of people are preferring that, not trading prop firms. Prop firms is good. Stan more knows more about them at the end of the day. Because is Funding Traders a prop firm there, Stan? Is that essentially what it is?
Yeah, exactly.
Yeah. Um, so when it comes to going into prop firms, Stan is definitely the one to ask. I'm interested in going to a prop firm, um, just because of the amount of money you can make from doing it, and you can be very profitable, very, very profitable. Um, it pains me to see people showing off their 1K accounts when they could be trading 200K funded with. Yeah, no, I couldn't agree more. Um, I'm absolutely 100% going to a prop firm personally. Doesn't mean that I won't stop trading with my own portfolio. I'll still be doing both because that's just what I know. I know crypto. I know how to trade it. I know how to use my exchange to the best of my abilities. So I'll probably still be trading with my own portfolio on top of having that prop firm as well. But yeah, 100%. If you have an opportunity to get to a prop firm and you can get in, absolutely, 100%. And Sullian had a question. Waiting for an order block. Take entry from there. How do you choose an entry? Same, or do you take advantage of the 5 and 13 EMAs? So the 5 and 13 EMAs, I don't trust as much as I do the 50, 200, and 800, to be completely honest with you. You do see price bounce off of, I have it set as the 5 and 16 EMAs. You do see price get rejected from it, um, and it also gives you a good indication of direction before the 50 EMA does make that correction as well and turn to the upside. Um, so just taking a look at my chart here, you can see that it has made a slight breakout, but it's going to go retest that line. So the two EMAs have flipped, indicating upside potential. It may reflect off that 16 or that 5 EMA and continue upwards, but at the end of the day, it's not as strong as the 50, 200, and 800 EMAs when it comes to deciding on direction. I've started to use divergences as well. I've started implementing that into my strategy, so I'm still new when it comes to that. Stan and I have talked about it a bit. All right, catching pips. Do you have any questions before we head out there, buddy?
Oh, sorry, I didn't mean to interrupt.
Oh no, you're good, man.
Yeah, no, just wanted to thank you, and I really appreciate it, man. You're a big help. Thank you very much, dude.
Anytime. Hopefully, I brought some new information to some people on the table. Again, I'm pretty new at this whole teaching thing, so hopefully, as time moves on, I will continue to get better and continue to pass as much knowledge as I've got onto other people. If anybody has any information whatsoever that they think I don't have, 100%. Feel free to tell me. I'm super interested in learning myself, so I'm always open to new ideas. At the end of the day, we're all traders. We're all here to make money. Having other stuff in my back pocket just helps me as well. So I'm gonna essentially just open the floor to any and all questions that anybody has here before we head off. Kind of last minute questions. Hopefully I've hit every single point on everyone's list that I have here. Kind of just touched on the basics a bit, talked about psychological stuff. So does anybody have any questions at all before we head on out?
How long did it take you to like develop your strategy or like figure out what your like approach was going to be?
Approach psychological, it took me about 5 months, 6 months. Approach to trading style, it's been an 8 month process, 9 month process. Because I work a full-time job as well. So me being in the charts, I'm in the charts from 8 in the morning till about 1:30 p.m. When I'm at work. And then I can glance at the charts while I'm at work from 3 to midnight. So just building that strategy has been definite definite long road. When it comes to psychological level and dealing with it mentally, like the losses and how to look at stuff differently, that was a good sit down and was really rough to kind of get past that and go from there. Um, at the end of the day, having a good support group, good traders around you to help you push further past the mental stop is definitely helpful. Robbie's helped me, Lobo's helped me, Blackson's helped me, and you guys are an Apex Bull, so we're always here to help you with anything you have when it comes to like mentally trading, getting over losses and stuff like that. So feel free to reach out to any of us. Like my DMs are open at all times. I can't say the same for anybody else, but you can always have a chat with somebody. Kind of say, hey, how do you deal with this as a loss? And we'll definitely be able to give you an insight on that. But it's not a smooth road getting past that mental barrier. It's really tough. Um, but hopefully, with us here in the classroom, we can help further that along at the end of the day. So, I don't know how to say his name. I'm gonna say
It's
Emmett.
just it's the bird from Lion King. This is just the weirdest spelling I could think of. I'll
Oh,
probably
gotcha.
just make it my actual name here soon so people don't have to deal with that.
Oh, gotcha.
The
Oh,
bird
it's
from Lion King's name is Zazu, so that's
Azazu.
the intended
Gotcha.
spelling, but I did a terrible job, obviously.
It's all good, man. It's all good. So, did that kind of give you a little insight on how I look at it mentally and stuff like that?
Yeah, definitely.
Yeah.
I mean, that's like been the biggest thing for me. I've been like, I don't want to say I've been a trader, but I've been trying to trade for the better part of like 2 years now. Um, and that's like been the biggest thing for me was finding a strategy that worked
Mhm.
for me. And I spent a lot of time like analyzing price on like higher time frames, but yeah, like I said, I just don't know if that works for me. I just will wake up so many times in the night and just like start checking the phone and like stressing over it.
Yeah, I hear you, man. I hear you. Definitely having that disconnect from the charts to your life is a big thing. So when, like, don't get me wrong, I'll glance at the charts throughout the day as well. Like, uh, every once in a while, I have price alarms on my phone. So if this retraces back to my entry, if it hits 1290, it's going to set off an alarm on my phone to tell me to look at the charts because some shit's happened. Um, but having that disconnect between the charts in your life is a big thing, and it kind of gives you a breather when it comes to going back into it because you're not always in the charts at all times. You always have that break time to kind of clear your mind, go back to ground zero. So when you do go look back at the charts, you see it in a different mindset and a different time frame kind of a deal. Um, so that's my biggest recommendation is to give yourself breaks. Everybody needs a break. Like if you work a 9 to 5 job, you get breaks throughout the day as well. Do kind of the same when it comes to trading. Um, Minimize it while you're sitting at your computer and go play video games for an hour if you're not actively in a trade. Um, that kind of a deal. And I understand some people in the back of their minds are going, oh, well, what if I miss something? Yeah, what if you do miss something? It happens to the best of us. It's it's okay to miss trades. It's okay for price to not hit entries. It happens. You just have to look at that as a trade that never existed. So I have a good example here. I had a BTC short sitting at this key level here, 17,462. It never hit. So instantly, as soon as it never hit, in my mind, I never went, oh, well, I should enter now since it never hit. No. I now look at that trade as that trade never existed until price returns to that area of entry. So the limit order is gone. I'm going to completely ignore it and not dwell on it. Same when it comes to getting stopped out. The second you get stopped out, give yourself 20 minutes, 25 minutes, let's say. You can increase and decrease time as you go along. Give yourself 25 minutes to look at that chart, write down what went wrong, and then take that trade, put it in the trash inside of your mind. Don't think about it. Move on to the next one. Get your mind switched over. All right, what's next? And then go on from there. It's getting past that little blocker of, oh shit, I just lost, and then you get scared to make another entry. And then when you're scared, you look at the charts wrong, your TA's incorrect, that kind of a deal. So hopefully you can add that to your little book, put that in your back pocket, and hopefully that'll help with the whole mental side of trading. So yeah, did that answer your question there?
Yeah, definitely. Thank you.
Not a problem. Okay, I'm gonna just call him Emmett because he has a lot of symbols in his name. The gentleman I was talking to earlier in the general chat. You got a question at all there, buddy?
Mic off. Mic on.
Is your mic muted?
Mic off. Mic on.
If you have a question, if your mic's not pardon me, working, just type it in chat. And if you don't know how to get to chat, so hover over Trashman's Classroom, and it'll pop up with like a text bubble and stuff like that, and just click on that, and it'll pop up on most likely your right hand side, and then you can just type directly into there, and that's just in this chat. Alright, so while he's kind of figuring that out, Silvino, I saw you came in late. Welcome. We're just kind of closing up and stuff like that. Do you have any quick questions at all for myself? Anything about like the mental side of trading or basics and fundamentals and stuff like that? Do you have any questions about that, Silvino? Try and talk now. It may have been permission side.
Probably has to change the settings of his input
Yeah,
thing.
probably from push to talk to. Yeah, because the settings in the permissions are good.
Voice activity. Oh, there it is.
Oh, there we go.
That's
Silvino,
all.
is your mic working there,
Super.
buddy?
Yeah, it was super frustrating. I was like, I am so speaking. What has changed here, except for me to run downstairs real quick and come back up to my 3-year-old next to the computer? But that's all good, man. She's learning. This kind of comes back to what Stan was mentioning a little bit earlier about waiting for candlesticks to close. Have you guys noticed whether you're like on the 15-minute, even the 1 hour, you know, time frames, like the last 30 seconds, like depending on whether how big the candle, it doesn't matter how big it is, okay? You know, because that's just hindsight trading, okay? But, and I don't want to go to there or anything hypothetically like that. But have you ever noticed whether or not it's either halfway trying to go back up or halfway trying to go back down around the last 30 seconds of the bar before the bar closes? There's always a lot of movement.
Towards the end of a candle close, especially on the
Yeah.
higher time frames, there typically is more implied volatility when it comes to it. 15 minute, you notice it a bit, but definitely on the higher time frames, especially the 4 hour daily.
Or right.
Yeah, that
So
definitely.
do you guys ever cross check? Do you ever use those as like multiple time frames to take a look at and help understand? Okay, like say for instance, I'm looking at your chart right now and the possible breakdown where that arrow is going into. Okay, look, it's hitting your channel right now, and it looks like to me. Yeah, exactly. So the different multiple time frames have now shown something completely different. Um, but yeah, it what is the importance of that and what is there to gain and
So,
understand?
so when it comes to candle closes and stuff like that, it's all dependent on what you have set up for that time frame. So let's say I have a, a pennant set up on the daily. So that
Mhm.
that pennant is now dependent on the daily time frame because it was set up in the daily. I'm not going to trust a 4 hour candle breakout on a daily pennant
For
to
sure.
tell me that there's a breakout. So right here it's a 15-minute channel.
It-
So I did the arrow and then a possible breakout, but that breakout most likely is not going to happen. Depends on how it respects that 50 EMA, just because of how much volume is behind that breakout. So I'm not over concerned about this exiting the channel. It could also possibly mean that my channel is just not in the best place possible. It looks good, but we'll see how it goes on. If it does make a high volume touch, most likely to the daily open, then that'll be, in my mind, a confirmed breakout of that trend. It is the open of a exchange. Futures opens in about an hour and a bit. So we'll definitely know the direction that they want to go in about an hour and a bit. Um, but yeah, when it comes to time frames and stuff, absolutely. It's you gotta watch the candle closes and
The close, for sure. And you know, it's like the open is like the heartbeat almost like of a candlestick. And I'm not here again to say that you can gauge of which direction that candlestick's going to end up being at the close, but like I don't know, sometimes it seems like if they like the one that we're watching on your screen right now, okay?
mm-hmm.
So it's starting to go down and then it's going to retrace back up again. Now for me, for looking for something that seems valid to me, if it retraces up 50% and then hovers there and then it kind of barely starts creeping back to where it opened, it generally seems like it wants to it's either going to throw a hammer at you or it's going to go right back down.
Absolutely,
And
yeah,
you know
yeah.
and so those are huge things that really help me, and it took hours upon hours of just watching charts play. I would go
Mm-hmm.
back and I'd go 2 days and I'd turn it on super fast without any indicators or anything going on, and I would just watch bars and go, what is going on and what's their behavior like.
Yeah, absolutely. Another big mental thing to kind of think about when it comes to how the chart is doing as well is we're here to trade with the market makers, the institutions. So we're here to trade against the retail traders. So the people who see a massive pump and go long. We're here to trade against those guys. It may sound absolutely terrible, but at the end of the day, that's what they do. So when Because if you did not have anything on here, nothing at all, you see that massive pump there, the retail side of somebody's mind is gonna go, oh, it's gonna retrace all of this. It's gonna pump.
Going.
We're gonna go long here.
Yeah.
If you just take a look,
Did the opposite. But there's other factors into it too, because
absolutely,
that's the liquidity right there.
yeah, it's price moved up to zone to stop out the
Hmm.
short traders in this zone here.
Right.
When you see, with the hybrid system especially, when you see red vector candles, the market
Hmm.
maker and institutions are building their longs. When you see green vector candles, the market makers and institutions are
Shorts.
building their shorts. So that's another factor to look at. So definitely
Yeah.
having that retail trader aspect in the back of your mind helps, because you can
Hmm.
look at the market and go, if I was a retail trader, I would go long right here. Now you know the complete opposite way that the institution and the market maker is wanting to go, because they're wanting to eat up their liquidity, their stop losses, and stuff like that. So then that puts you in their mindset of following them in their trades. So yeah, your mic's just a tad bit messed up there, my friend. I didn't catch a word you said.
Steroids.
Really? So
It's not working.
Yeah, it's a little messed up. If your mic has a audio input like a plug-in, try either unplugging, replugging it back in, or it could just be slightly unplugged as well. Same with your mic. If you have a plug-in mic as well, try and unplug it and replug it back in. Oh, he's typing. Perfect. It's all good, man. It's all good. I don't mind spending a little extra time kind of answering some questions and stuff like that, getting everybody at a good spot and fulfilled with this classroom here. That's my end goal with this class, is to make sure everybody had their answers or their questions answered, so they can go back to the charts with kind of a more in their back pocket, as I say. So. So just to kind of go back to the whole classroom thing, there is a open classroom for Thursday. Anybody can sign up. If you've been in classes before, you can re-sign up again. You may or may not get a different teacher, so you may or may not get a different outlook. It just depends on the time availability for the teacher and who is in that class, because we are trying to mold the um, teacher to be the same kind of trading style as the people in their class. Some days it works out better than others, but then again, this is a trial run for that. Um, so some days some classes you may get a teacher that trades an entirely different style than yourself, or trades different things than you. Um, but at the end of the day, they'll probably have a different outlook on what's been going on, kind of what your questions are. I know me personally, we've had some people in here who just trade forex, commodities, and stuff like that, and I'm just starting to get into that, so I don't have as much of a look into that. But I'm really happy that Stan's in here to give me a hand when it comes to that. Um, but yeah, so hopefully I answered everybody's questions that they had when they submitted their applications and stuff like that. And yeah, if anybody wants to sign up for the Thursday class, it has been announced. Just redo the application again that you did before, and just at the bottom select what time slot you want, and we'll get you paired up and back to her again with any more questions and stuff like that. Maybe a short introduction. I should have signed into apexbull last week. Wasn't successful in trading. That made the reason stick to the trading. Stan can help me on this. So, not successful in trading in. Yeah, we'll stick around to answer your questions there, Silvano. Absolutely.
No, I don't mean it right now, but in general, yeah.
Yeah,
So I think
yeah,
we're
no,
wrapping up.
absolutely.
Yeah, we're gonna have more of these classes.
Yeah, we'll
And
wrap it up
yeah,
right now. We've kind of went half an hour over, but we'll get everybody's questions out of the way. All right, well, thanks for
Trashman, you
coming.
did a fantastic job, man. Thank you for
Thank you.
sharing with us. Talk to you soon, man.
Yeah,
Yeah,
no,
thanks, guys. Much,
no problem.
that's awesome. Appreciate everything, and see you guys
Yeah,
on
thank
the
you.
next session.
Yeah, man. Thank you.
Yep, thank you.